Good afternoon, friends. On 1st of February 2025, the Honorable Union Finance Minister, Ms. Nirmala Sitharaman, would present her 8th successive budget, and we'll come out with our video just after the budget. We also have our webinar on 2nd of February at 9:30 a.m. sharp, where we will discuss on clause by clause analysis of the union budget. In this video, we'll discuss on the top 10 recommendations of income tax, foreign taxation, corporate tax, GST and customs. So first and foremost, for corporate tax, and as the many chambers of commerces have recommended for the Income Tax Act revamp, is the complete revamping of TDS or TCS provisions under income tax. There are more than 71 TDS or TCS provisions in income tax, many of them overlapping, like section 194Q and section 206C1H. Many rates are there. Many of the rates were reduced in the last budget in July 2024, but still there are multiplicity of rates and multiplicity of litigation due to so many sections. It is recommended that there should be one schedule like the customs tariff for TDS provisions, and there may be 2 or 3 sections, like one section for goods, one section for services and one section for TDS or TCS on others. This would make life simpler for the TDS deductors, and also for the government it would help relax multifarious litigations. TDS at all, finally it is a advance tax and nothing more. For MSMEs, it is expected that the threshold limit for presumptive taxation under section 44 AD and ADA, that should be doubled for 44 AD for businesses under presumptive taxation from rupees 2 crore to 4 crores, and for professionals from rupees 50 lakh to 1 crore rupees. This threshold limit is constant for the last 8 to 10 years, and now to relax the burden on MSMEs, it is expected that this threshold limit should be at least doubled, if not more. Personal taxation, over the last 2 to 3 years, it is seen that the government wants all the taxpayers to shift into the new tax regime. So now with this Income Tax Act revamp, it is the time which is ripe that the old tax regime in income tax, in personal taxation, should be done away with, and only the new tax regime should be the tax regime for the taxpayers, that is without many exemptions or deductions. However, simultaneously it is also recommended that the threshold limit should be increased from 3 lakhs to 7 lakh rupees. The 87 capital A rebate should be increased from 7 lakh to 9 lakh, and most important, to facilitate and to compensate the higher tax income taxpayers, it is expected that at least there should be a new slab of say 25% for 15 lakh to 18 lakh bracket, rather than taxing the entire income over 15 lakh rupees at the rate of 30%. Fourth, in personal taxation, as always, for salaried taxpayers who are bearing the biggest brunt of income tax, standard deduction was increased from 50 to 75,000 in the last budget. It is recommended that it should be increased to 1 lakh rupees at least in these days of high inflation, where the salaried taxpayers are also spending a lot of money on conveyance, travelling, mobile expenses, etc. for earning their salaries, relocation also. So it is expected that the standard deduction should be increased. Fifth is for deduction for investment on National Pension Scheme, where the threshold limit is 50,000 rupees, should be increased to at least 1 lakh rupees, because it is constant from the last 8 to 10 years, and even if we take 6% inflation rate, then it should be at least doubled. Mind that standard deduction for salaried taxpayers, NPS investment for all taxpayers under section 1886 CCD is applicable for taxpayers under the new regime also, and it would give a benefit to all that personal taxpayers. Sixth, again, is the deduction for interest on loan taken for construction or acquisition of house property under section 24B, where the threshold limit of 2 lakh rupees is constant for the last 8 to 9 years. That is expected also to be doubled, because nowadays houses prices have also increased, especially in the last 1 or 2 years, and more home loan is required. Therefore, there would be more impact of interest. So, the threshold limit for deduction is expected to be increased from 2 lakh to 4 lakh rupees. Interest on fixed deposit, number 7 recommendation. There is a report of SBI which has recommended that 15% tax should be levied on interest on fixed deposit, which are generally made by the senior citizens or elderly citizens. It is also expected and recommended that the taxability of interest on fixed deposit should be on the redemption of the principal amount of fixed deposit, just like the shares and mutual fund, rather than on an accrual basis every year. So, as of now, interest on fixed deposit is taxed every year, irrespective of the fact that the interest may be received after 5 years. So, to bring them at par with the mutual fund and shares, it is expected that they should be taxed also on redemption. Furthermore, for shares mutual fund investors, there is a exemption of 1.25 lakh rupees per annum under section 112A for listed securities. It is expected that for fixed deposit interest also, there should be a similar deduction for the taxpayers also under the new regime. There is already a deduction under TTA, TTB, it may be brought for taxpayers under the new regime also. 8th recommendation is on Indian residents who are earning income outside India. For them, in case tax is deducted outside India, they get the credit of such taxes in India only on production of Form 67 till the end of the assessment year. Many of the times, it is seen that this Form 67 is not issued by the foreign tax authorities for months apart. It is no fault of the taxpayers, and all the courts have held that such credit should be available even if the Form 67 is delayed. Now, it is high time that litigation in this respect should be put to rest, and this limit of producing the Form 67 till the end of the assessment year, this should be withdrawn. For customs, it is a long-standing demand that there should be an amnesty scheme for importers and exporters under the Customs Act. It is expected that as of now, in all levels, Supreme Court, High Court, CESTAT and Commissioner Appeals, more than 50,000 cases in customs are pending. To add on to this, 5,000 cases are added every year. So, it is imminent, pertinent, very important that amnesty scheme in customs is brought about so that the importers and exporters can also clean their balance sheets. There is already an amnesty scheme for almost all other taxes like GST, income tax, service tax, central excise, VAT, etc. Why not customs? And last, under GST, it is expected that to bring a relief for the brokers, agent, auction platforms, auctioneers in India, where even if the underlying goods or services are supplied out of India, the brokerage is taxed under GST in India. For example, there is an auction platform in India where the goods under auction move from London to Paris. Then the fees for auction or the auction commission is taxed in India under GST, and this 18% liability is a hardship for the Indian brokers and it makes them unviable in the foreign market. It is expected that should be a relaxation in section 13 subsection 8 clause B of the IGST Act to bring a relief to this agents, brokers, auction platforms, etc. So friends, these are our 10 recommendations. The PPT for this video is attached in the link below. Thank you very much for watching. Do share, like and subscribe to this channel. Thank you very much.